Okay, so now we're going to continue with chapter 1 with all right, so we're going to be looking at 5 areas of accounting. Okay, so there is going to be public accounting, okay, so also known as the CPA, which we'll talk about that. We have private accounting, we have government accounting, nonprofit accounting, and international accounting. Okay, so I'm going to break down each one and what each one involves. So again, when we talk about public accounting, so if you guys talked to many accountants before, widely known is going to be the Certified Public Accounting, which is also a CPA. This is for sure going to be more geared towards corporate status, but also the major region, I guess, or area that that these public accountants cover is going to be primarily taxation. Okay, now so if you're interested in tax and learning more about tax, you do actually possibly need a CPA. But if you're doing a tax for a smaller company, then no, you don't really need a CPA license for that. Now, CPA, again, it's basically geared towards major corporations, okay? So, again, they have a little section for auditing. So, again, because of the whole government involving themselves in every corporation, they need to have a department for auditing purposes. So, again, someone to just review the whole accounting system, reviewing the books and stuff. And then there's taxing, okay? Because taxation, especially for corporations, if you can imagine Walmart, okay? How many transactions can Walmart have in one day? They can have billions, okay? Not only incoming sales, they also have returns and allowances, and they have exchanges. So they have a billion transactions every day. And of course, keeping track of that and being to file the taxes for it, they have 1 million employees. You know, so the tax department for that, and you'll see a lot of CPA firms that do this, that they're geared towards helping those corporations, such as the Big Four. I don't know if you guys know the Big Four. So Ernst and Young, Deloitte, those are going to be the big accounting firms that primarily does the taxation for corporations. So again, looking at a corporation's books, you can only imagine how intense and how labor intensive recording transactions with filing taxes is for. It's pretty hectic. It's a lot. And of course, with that being said, when I mentioned earlier, corporations, right, and being involved, the federal government being involved in those kind of organizations, that they have what's called forensic accounting. Forensic accounting, I've taken a course in it. It's really fun and very easy if you like something like investigating, okay? So that's pretty much what forensics does. Is it's actually a person who investigates a corporation's financial statement and see and test, but also see if there's a possibility of fraud going on. So looking at their financial statements, their books, their information to see if there's a possibility that they can try to, take a couple pennies here, So that's what forensic accounting does. It kind of investigates the activities and see if there's anything abnormal with the company. So again, this is boggling down. So not only do you have someone that's auditing, you have someone who's investigating for the purposes of the federal government trying to boggle down on these corporations. So we have those sectors, so sections in the sector, okay? So that is going to be public accounting, all right? The next one is going to be private accounting. private accounting is more for smaller or mid-size businesses, right? So this one, there's a lot more roles and a lot more activities that you can do in private accounting. So for example, of course, if the public also has auditing and taxation, so does small companies. You can do a small audit for a smaller company, making sure that their books are accurate. Also filing taxes for a smaller company. So like a smaller accounting firm can do taxes for smaller businesses. So of course, those are also included. Not only that, it also expands to financial accounting. So financial accounting is what we are basically focused on, is understanding how a transaction affects a business, and you are going to learn how to record the transaction and produce these financial statements. So that is primarily what our focus is. We are looking at a small business, and what our main focus is, we're understanding the business of a transaction. We're understanding how to record and analyze the information. So this is the number one step towards accounting. It's the building block. You need to have the understanding of the transaction in order to accomplish the rest of the other sections in the private accounting. Okay. Once financial is broken down, we have managerial accounting. So this is testing for, you could do analytical work when it comes to accounting, and then that can break down to cost accounting. So cost accounting is basically looking at your total cost and see how that affects the business, especially for manufacturing companies or activities. So especially when you're boggling down on taking shortcuts and basically calculating the cost it takes to run a business. And that's what cost accounting is, okay? Other stuff is like budgeting. So again, if you are part of the cost accounting, you also need to know how to budget your books as well. Set a projection or set a goal to reach when it comes to spending money, budgeting wise, okay? And also there's also green accounting. So this is more for understanding like charity work or things that you want to, for corporations or for small businesses, to do things that are environmentally friendly, okay? So maybe that could also lower cost as well by, instead of having lights run on all day, you can have solar panels to run during the day, and then at night you turn on the lights. Okay, so that's a few things that you could see there. Other things are treasury accounting. So this is typically where your bank person is. So whether it's a bank broker loan or whether they're the people that sit at the bank teller, those are going to be your treasury accountants. Okay, they're the ones that have to count the money to see how much money is people are depositing, as well as how much money is people like taking out of their banks and stuff. Okay. And then lastly, a section is going to be financial planning and analysis accounting. So this is, again, more geared towards like profit and loss, but also return on investments. So usually looking at a company and seeing, well, is the company actually profiting a lot of money compared to the original investment? So if you invested $50,000, has your company produced $50,000? Okay, just because you make a profit, you have to also include, don't forget to calculate all the expenses. So in total, did you actually earn money or did you lose money? And sometimes when you were dealing with smaller companies, it's actually very hard to actually earn a profit the first year, okay? Just because your original investment, if you dumped $50,000, just because you earn a $2,000 profit, that doesn't mean you earn $50,000. You only earn $2,000 of the $50,000. You haven't broken even yet. So that's what the financial planning and analysis accounting does. It gives you projections. Oh, if we at this rate, if we continue going at this rate, eventually at this time period we'll break even. Okay. So that is private accounting, all right? And make sure that you guys understand that when we're doing in this class, we are focusing on financial accounting. Okay. Any questions in private accounting?
Are they all licensed CPAs?
For private, no, you do not need to. Only public. And then there's also some sections in the public sector that you may or may not have to have a CPA. It's only if you go into, for example, if you go into Deloitte, which is one of the big 4 accounting companies, if you go apply for there, they're gonna want to see a CPA. But you can always intern there, and eventually, you can learn how it's like to become a certified public accountant. And what happens is maybe future in the long run, you could acquire your CPA license. But for private accounting, no, you absolutely do not need one. You just need an accounting degree. Okay. So, yes. Any other questions? Okay, so the next section is going to be looking at government accounting. So, of course, now this is pretty much geared towards government-funded agencies. So, again, when we look at government funded agencies, it's kind of like the agency that, for example, One Stop Career Center. They are a government funded agency. They receive money from the government that provides for individuals or for unemployment, especially unemployment. They provide for them as well. So with that being said, there needs to be someone who runs the books behind the scenes too. So they need to have such as budgeting management. That's very, very, very important that they have someone that does that. Agency fund management, which is along the lines of budgeting, right? They need to make sure that they're given this amount of money. So how are we going to divide the money into specific areas? So for example, if we have like $1 million, maybe half of that money is going to go towards unemployment, and the other half is going to go specifically towards training. Okay. Also resource management. So again, looking at the types of activities that the agency can have to do. Those funded agencies, like such. So again, I mentioned DEETR. DEETR. Not only are they in charge of unemployment, they're in charge of training, and they're also in charge of employment itself. So, yes. So that's government accounting. Okay. Non-profit accounting. So again, I've talked about this before. It is a completely separate entity or separate rules, I should say, that it goes along for accounting. So that's why it's considered as an area of accounting, because it's one of the most difficult ones, just because these organizations are they're not raising money for the purposes of making money. They're raising money to spread awareness. So they need to have people such as, to budget the money, right? If their source of income is purely from donations or membership dues or even contributions from other major corporations or even fundraising itself, you need to be able to budget the costs, because of course with all that fundraising there is actually a small section, usually it's typically the membership dues actually pay the people to run the business. It's not purely volunteer. There is incentives such as, if you become the president of this nonprofit organization, then yes, we'll compensate you for it. Usually that comes from the membership dues, but other things come from, like, if they have a facility, they need the money to pay for those things, pay for the marketing materials, the t-shirts, the flyers, etc., etc. So budgeting is definitely going to be one of those sections that are going to be necessary. Even funds management, saying how are we going to raise the money? Like, for example, if we do a fundraiser every year, how am I going to maximize the amounts of funds we're going to be receiving? Do I need to do more marketing? Do I need to do more advertising? Or do I need to again, do I need to buy more materials to hand out? Things like that. So funding management is going to be, how are you going to get the money? Budgeting is how you can spend the money, etc., etc. Okay. And then lastly, international accounting. Yes, we're going to talk about this in chapter 4 specifically, when we dive into learning the generally accepted accounting principles. International accounting, yes, there's a specific area for it, because you won't believe how different international accounting is compared to the United States. So of course, with that being said, we need to deal with foreign currency management, because again, the dollar changes every day. So we have to be able to convert it, okay? And then understanding the rules in the region, and especially doing business outside of the U.S., there's certain rules, such as there's different rules in Asia versus Europe. Okay, so understanding that, but also doing region accounting. So what areas, if you're profiting in everything in Europe, how is that going to benefit, kind of thing. All right. So any questions in regards to the 5 areas of accounting?
No questions.
Okay, good. Okay. So now we're going to be looking at financial reports. So there are a total of 4 financial statements that are very, very, very crucial when it comes to running a business. The first one I'm going to introduce is going to be known as the income statement. Other terminology for the income statement is the P&L statement, or the profit and loss. Okay, so what this really does is it kind of breaks down the company, and it pretty much recognizes your total sales, whether it's cash or accrual, okay, whether it's cash basis or not. It takes all of your sales and it counters them by covering all of the costs that you had to incur in order to do business or operate your business. So this is how you can get a good measurement of profitability, okay? And you have to create the income statement. So is setting the price of selling a product enough to cover every single cost that incurs in your company? Okay, and the expenses that can incur is obviously, if you have a building, you need to be able to pay the rent on it, pay the utilities, pay for advertising, pay for insurance. You need to be able to cover your sales. Need to be able to cover all of those aspects, and we'll actually look into this when we dive into our fictitious business. So income statement pretty much measures profitability, and if it's a positive number, you made a profit. If it's a negative number, you have a loss. So, yes. The second one is going to be the statement of owner's equity. Now, this is where I've mentioned here and there where you do have the possibility to either invest your company. You can also take out money from your company, and you can also, when you have your profits, you can also reinvest your money into your company again with the profits. So that's typically what you should do as a small business, especially if you're starting out. You always want to reinvest into your company because that's going to allow your company to grow and expand and allow your net worth to be a lot bigger. Okay? So that's exactly what the statement of owner's equity does. Is it's going to look at your original investment. What did you start out with? And if you had a net income, then it's going to increase your value of your company. If you had a net loss, it's going to decrease. And then if you've had capital contributions, meaning you invested more of your own money into the company, then it's going to increase. But if you take away from your company, because owners, right, they and the company are one. So if the owner owns the company, that means the owner can take money away from the company. So if you do, then obviously it's going to lessen the value of your company. So that is exactly what the statement of owner's equity does is, are you going to reinvest into your company? And if you are, then you need to show how much the company is worth now. Okay? Next one is going to be the balance sheet. So this is where the accounting equation comes into play. So this is where we are taking all of our assets that we own and we're comparing them to our total liabilities and our total equity. Okay, so again, this is where we need to make sure that the accounting equation holds true. And if there's a discrepancy in there, let's say your assets does not equal your liabilities and your equity, then you're going to have to work your way around to figure out what is the missing component. Because that's the whole point of doing business. You want to make sure that everything that you own is equivalent to everything that you owe and reflects the value of your company. Okay, so that's that one. And then, of course, the last statement is going to be your statement of cash flows. Now, this is more applied towards companies that use the accrual basis. So as we learned very, very briefly, and we'll learn more about it in chapter 4, when we look at a business that's doing a cash basis, you only have cash, right? So the statement of cash flows would be kind of useless because you already know how much cash is flowing into your company and you know how much cash is flowing out of your company. But when you're yet on an accrual basis, you have that notion where you're able to sell your product, but you also have people owing you the money. They still haven't paid you yet, but they owe you money. And you also have the possibility to owe other people money too, which is in accounts payable. So with that notion being set in place, that is why the statement of cash flow is necessary, because we want to look at the company at a cash standpoint. How much cash is actually really flowing into the company and how much cash is flowing out of the company. So this is where you're going to convert from accrual basis into cash basis and look at your profits in an actual, did you really receive the cash standpoint, okay? All right. So that's the definition of what a statement of cash flows does. It takes the accrual basis, converts it to cash basis, and it determines how much cash is really flowing in and how much is actually leaving the company. Okay. So those are the 4 financial statements. Any questions in regards to them?
No questions.
Okay. All right. Internal controls. So this is the section that I was talking about that is the reason why the federal government is so, is so involved with corporations, especially businesses like these. Because again, so due to Mr. Enron was an electrical company that was the only electrical company that pretty much what they did was they did a lot of things that frauded not only the people who were buying into Enron, but also the people who were viewing the books. So we call it when there's incrimination going on, we call it cook the books kind of thing. So that's why, due to that whole Enron fiasco, where they found out that that Enron, they purposely turned off the electricity so then people would buy more into it. So then they would crank up the bill, of course, for electricity. But not only that, they also charged an insane amount for electricity, and they were the only company that was available for electricity at that time. And that's the reason why the Sarbanes-Oxley Act actually became into play. It is basically the importance of having public companies maintain an internal control when it comes to, producing their financial statements and et cetera, et cetera. So what does that even mean? So for Enron, the owner of Enron, not only was he the sole owner, he's the one who manipulated everybody. He's the one who paid off these people to work for him and controlled every single aspect. He's the one who got Arthur Andersen to do his books, and he paid him off to say, write my books so it looks clean. He controlled the company and every aspect of it. And what happened with that is, of course, not only was he wrote the checks, he distributed the checks, he did everything for the company. So that is why they have this set rule where you can no longer do that anymore. You need to at least to have two people to do one transaction. And I'll give you an example of that. But let me explain. So the whole purpose of having internal controls is that you have the main front man, but his tasks are limited. And then it goes down to a bottom branch, and then you have your CEO, you have your CFO, your vice president, et cetera, right? You have more chain of commands that are distributing the duties amongst the people. So then you have the prevention of fraud. Because if one person is a worker and does the payroll and signs the check, they can might as well write themselves $1 million check, and no one else would be able to say anything, because they're the ones that's writing the checks and they're the one that's signing it. So that's an example of what I mean by that. Now there is a example. I'll give you an example. So the payroll, they're the one that processes everything, but the person that has to sign it is the president. Okay, so that's two people to doing one task. Okay, so that's what I mean about chain of command, right? If a situation happens, it goes up the chain of command, then it goes up to the CFO, then it goes up to the vice president, then it goes up to the president to make the executive decision to go back down the chain of command. So that is Sarbanes-Oxley Act for you, and that's the purpose of having internal controls. Okay, it's to prevent any means to prevent fraud from happening by involving multiple people in a single transaction. Okay. And lastly, course review. So again, the nature of a business is pretty straightforward. You're finding resources to provide a good or service to the public. The 5 different types of organizations are sole proprietor, partnerships, corporations, limited liability company, and the nonprofit. And here I kind of give you a little brief summary of what the difference is. Yes, the sole proprietor is only one person, et cetera, et cetera. So I gave you a little brief summary on exactly what the differences are. Okay, I've listed out the different types of activities there are, the 3 types. So service, service, manufacturing, and as well as merchandise, or so also known as retail. You also have the 4 financial statements that are very important: income statement, statement of equity, cash flows, and balance sheet. You also have the difference between the bookkeeper and the accountant. And lastly, you also have the 5 areas of accounting, which is public, private, government, non-profit, and international. So again, I just want you to really get away from this is to primarily focus on private accounting. We are a sole proprietor, okay? Yeah. And that's pretty much it, okay? Any questions in regards to chapter 1? All right, let's see if we're good on time. So it's exactly 10:40. So let's go ahead and dive right into the chapter 1 exercise. Okay? So question number 1 is, what is the nature of a business?
Can I say?
Can get got it, whatever.
Yeah. How you said is simple. Explain, make money, and minimize cost and maximize profit. Right?
Yes, make money. Yes, that is the goal of all businesses. But what is like the underlining goal? Like what is it? How do you make the money?
Um,
Produce goods or provide services.
Good. Produce goods and provide service. So produce goods and provide services. Good. In order to make that money. Good. All right. Number 2. What are the 5 types of business organizations?
Sole proprietor,
Yes, sole proprietor.
partnership,
Corporation.
Mm-hmm. Partner.
LLC.
Sorry, I usually type a lot faster than this. Corporation. LLC. And what's the last one?
non-profit,
Yes, nonprofit. You can't forget about those. Okay, nonprofit. Good. Now, can you guys give me an example of each one?
Sole proprietor, you are the business.
Mm-hmm. Can you give me an
You make all the
example?
decisions and you retain all the responsibilities for those decisions, both good and bad.
Okay. Like, can you give me an example? Like, can you think of a company that is a potential sole proprietor?
Like a local lawn care service business.
Yes.
So we're saying the same thing.
Yes, anything that is very small businesses. So anything that's like a mom and pop shop. Okay. Good. How many example of a partnership?
Like a law firm.
Yes, law firms are the most, I think, recognized type of partnership is a law firm. Yes.
accounting firms,
Yes, accounting firms. Yes, they can be. If it's a small one, they could be one as well. What about corporations? I've given many examples of this one.
So yeah, I mean, like Coca-Cola or
Yes, GM. Good. Coca-Cola. Good. Pepsi. PepsiCo.
Yeah.
All right. What about an LLC? You may use the internet if you would like. An LLC. What's a good example of an LLC?
This is like one general partner, right?
Yes. An LLC is a combination between a partnership and a corporation. Okay. So most often common that you will see is a company will include the title LLC. So it could be, for an example, it could be an accounting firm and they'll say LLC. It could be like, I think, was it Procter and Gamble is an LLC? Usually they'll have the LLC attached to their name. So it could be anything like whatever, Procter and Gamble LLC. So yeah. Okay, so they are a partnership slash corporation. Okay. And then give me an example of a non-profit organization.
It's not no honor there. So they work like association by membership, by volunteers. They have special taxes.
Can you give me an example of a typical organization that is a nonprofit?
Like Salvation Army or like churches.
Good.
Those are nonprofits.
Hospitals.
Yeah, Salvation Army is perfect. Goodwill is a good one. Yes, good. All right. I just want you guys to be able to recognize a real life example, so that it can you'd be able to relate a lot easier. Okay. So good. Number 4. What are the 3 types of business activities?
Service.
Say that again.
Service.
Service. Yes. Service providers. Yes.
Merchandising.
What was that one?
Merchandising.
Merchandising, good. Okay, so any retail stores, good. And manufacturing, good. Good. So one provides a service, one sells a product, and one makes the product. Good. All right. And then what is accounting?
It is
Is the systematic process of analyzing,
Okay, go ahead. Okay, analyzing. What else?
recording, recording,
Okay, so it is analyzing, recording. What else?
summarizing,
Summarizing. Good.
reporting,
Reporting. Oh,
reviewing,
reporting, reviewing. What else?
and interpreting.
Good. So many adjectives. Interpret. What are you analyzing? Recording. Oh, I put recording twice. What are you recording? Analyzing, summarizing.
Financial information.
Financial information. Good. Okay. Good. Number 6, what are the 5 areas of accounting?
so private accounting, public, international, non-profit, government accounting.
Okay. So public, private, international, nonprofit, and government. Good. Number 7, what are the 4 financial statements?
Profit and loss.
Profit and loss is one.
Balance sheet.
What was the last one?
Balance sheet.
Balance sheet, yes. You need to have the accounting equation in place. Good.
Statement of cash flow.
Statement of owner's equity.
Good. Statement of owner's equity. Okay, good. And then lastly, number 8, what is the difference between the bookkeeper and the accountant?
Bookkeeper recording business transaction and accountant doing everything else.
Good. Okay, so bookkeeper records transaction. Okay. Okay, so what entails into the what does the accountant actually really do? Like what are the lists and tasks that he does?
Record, analyze financial, do financial statement,
Mm-hmm.
collect data.
Good.
They
Okay.
do planning and forecasting also.
Yes, they do. Yes, they do planning and forecasting as well. Good. Good. All right. All right. I will post the answers after class. Good job, everybody. I do want to emphasize the importance of the course review because I'm going to tell you that is your gateway for a lot of the things that are in the class. So make sure that you know, if you need a quick review or anything, this is your best friend. All right. Other than that, homework tonight is to read chapter 2 and chapter 3. And if you guys don't have any other questions, you guys are free to go.
Thank you.
Thank you. Have a nice
Thank
day.
you. Have a
Thank
nice
you.
Thank you.
You too.